correct. We know, as you have mentioned, that last week the U.S. has delivered this 15-point plan. Iran has said, we're not interested in that 15-point plan. Here's our counterpoints. This is a bit like Groundhog Day. If you remember back to just before the conflict started a month ago, the two sides were in these indirect and direct conversations, and even then they could not even agree about what they were willing to talk about. Iran has consistently said that its missile program and its enrichment program is not on the table. Well, this is exactly what the U.S. has always said that it needs to have on the table. So the idea that these two sides are going to reach some sort of ceasefire or some sort of mediation without further pressure being applied on Iran, it seems very, very low likelihood. And this is why, we're thinking that there is going to have to be some sort of further force and force posturing deployed, as Lizzie and I were discussing, in order to sort of further extract pressure on Iran to drive it back to the negotiation table. Because for right now, Iran feels as though it's quite emboldened. It feels as though it can make these demands because of what we're seeing in the Strait of Hormuz and because of the threats and risks to the Red Sea, which people are incredibly worried about, and I think rightfully so. We see during this conflict that supply chains and energy markets can be a strategy, a target of war now.
Yes. So we're seeing Iran flex its muscles and use those levers of control that it has. Meanwhile, Lindsay, I wonder what you make of the extent to which we have seen regime change in Iran, or the extent to which we've not. I mean, we're just hearing from the Tasnim news agency in Iran this morning saying that the IRGC naval commander has been killed. That name then added to a list of Iranian leaders who have been killed as a result of the Israeli and US action here. To what extent have we seen regime change or not? Is that still pending?
Yeah, Anna, we know over this weekend that President Trump says that we've already seen regime change. Actually, we've seen several regime change, if you follow what Trump is saying. And what he's pointing to is a personnel point, but that is not a structural point. So absolutely, from the Ayatollah on down, we have seen personnel removals that the U.S. and Israel in particular have targeted the regime personnel. But the regime itself, for all intents and purposes, for all we know, remains in control of the country, is directing the conflict strategy. We know that the country itself is under an almost complete internet lockdown. So very little is coming from the country itself. But to suggest that we are already in a regime change scenario, I think is ambitious. I think it's not actually appropriate language. We have seen personnel shifts, but we have not yet seen the regime collapse or regime change. This is a regime that is very much continuing, by all counts, to execute a strategy that was set before the Ayatollah was killed, even as it has seen massive personnel degrading and those 11,000 attacks within the country, 11,000 strikes that the U.S. has imposed on the country itself. So we're not yet in a regime change scenario. Doesn't mean that we may not one day get there. But for now, I think that's inappropriate language to apply.
And Lindsay, Gulf allies are reportedly frustrated here, both at the apparent lack of strategy from President Trump, but also privately questioning American security guarantees. How significant is that for U.S. influence in the region? Could that frustration start to reshape alliances in the Middle East?
Lizzie, I think what we're seeing here from the U.S. administration is that the U.S. administration wanted to achieve certain objectives around the missile program, around the naval program, around the nuclear program, and then it has had, because of Iran's response, has had to make some adjustments. And now, so for example, the Strait of Hormuz and reestablishing deterrence over the Strait of Hormuz has now vaulted to the top of the list. And so the U.S. is now struggling with what cost it's willing to pay in order to achieve these objectives. And we know back at home in the U.S. that 3/4 of Americans are worried about the U.S. getting too involved there. So what that means is the signals coming out of the U.S. are quite difficult to read. And for its Gulf partners, that means they're left wondering, well, are we going to actually see the U.S. continue through this operation, or are they going to back away? That obviously leaves them feeling quite unsettled, quite nervous. But most of that is coming from actually Iran's strategy itself, the fact that Iran has decided to pursue horizontal political escalation and make the conflict not just Iran's problem, but the region's problem. I think that these partnerships, these alliances are deeper than just this conflict. They're economic, they're in terms of supply chain. You know, the U.S. under President Trump has worked very hard over this administration and his first administration to deepen those relationships. So I wouldn't think that these are going to, that this operation itself is going to damage those relationships. And if anything, it's shown to regional partners that the U.S. remains the most sort of impactful security superpower in the world. That's what we're all seeing from this.
Lindsay, thanks for your analysis. Good to speak to you. Lindsay Newman, visiting research fellow at King's College London. Coming up then, Iran-backed Houthi militants have entered the Middle East war, as we've just been discussing, raising concerns about the threat to shipping in the Red Sea. Of course, pre-existing concerns, reigniting concerns around the Red Sea. We will talk more about that next. This is Bloomberg.
What some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people. And there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, you know, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of hybrid content, and too often we talk about synthetic content and organic content and never the two shall meet, but there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction might be using models to do so. You know, stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg. It's Jobs Day, and Bloomberg has the report under surveillance.
Right now, the headline bad news is bad news.
This is a stagflationary mix.
It's a double squeeze for the rest of the world.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The market is tightening financial conditions.
It's not just what's happening present day. It's 5, 6, 7 months out.
The longest first quarter ever continues.
The March Jobs Report, Friday on Bloomberg.
They've agreed to send 8 boats 2 days ago, and then they added another 2, so it was 10 boats. And now today they gave us as a tribute, I don't know, I can't define it exactly, but they gave us, I think out of a sign of respect, 20 boats of oil, big boats of oil.
President Trump speaking aboard Air Force One there. It does seem that volumes going through the Strait of Hormuz still firmly reduced compared to what they were previously. Some of the Chinese and Pakistani shipments, according to our reporting, managing to get through. But let's talk about disruption to global trade. The Houthis' entrance into the Iran war adds further complications to global shipping and supply chains, already dealing with the blockage of the Strait of Hormuz. With the Hormuz and Bab el-Mandeb straits compromised, tankers are diverting around Africa, skyrocketing costs and transit times. Let's bring in our trade czar, Brendan Murray, who's been tracking the trade story for us and can talk us through some of the latest here. So, Brendan, how much does it complicate things that the Red Sea, now we could see tensions there, the Houthis entering the conflict, of course, and that brings in the Red Sea. But the Red Sea wasn't deemed to be fully passable even before this war started, was it? So what difference does it make to the global sort of shipping narrative?
Yeah, well, it just adds to the overall cloud of uncertainty surrounding the ability to ship goods through the Red Sea, the Suez Canal. The Houthis, have harassed shipping since late 2023. They had kind of gone quiet for a while, and some of the container shipping lines were even talking about coming back through the Red Sea a couple of months ago. But of course, since the war started on February 28th, they've started going back around. So the big question is, to what extent will the Houthis start to affect the shipping lanes? Again, in the energy sector, we've seen the Saudis come up with this workaround to pipe their oil across to the west coast, to Jeddah, and try to export it that way. So the question is, will the Houthis try to prevent that energy supply from reaching markets overseas?
And while you've got so much disruption a month into this war, how's the port ecosystem holding up? Yeah,
it's a really complicated one. Number one, because the air cargo, marine cargo, and road cargo are all sort of tied together, and you've got restrictions in air cargo capacity still. There's still some airspace that's closed, and the carriers aren't running at full schedule. You've got Jebel Ali, the biggest port outside of Asia, that is operational, but there's no volumes flowing in and out of there because ships can't come and go. And so that's creating the opportunity there for the port operators to try to work with other ports in the region to get containers flowing from these other ports. But we saw over the weekend that a port in Oman was hit by a projectile, and Maersk said that was going to be out of commission for a couple of days. So you've got this kind of whack-a-mole situation going on where the workarounds are starting to become the targets, and some of those targets are increasingly becoming industrial assets. We saw the aluminum smelter get hit over the weekend. So the war is widening not only geographically but in segments of the economy. Yeah, Maersk saying that impact of the incident is going to be limited, and Maersk shares actually up 1.5% this morning.
Yeah, which sometimes trades off the pricing, doesn't it? That longer route around Africa, if that's more likely, they charge higher prices, and then they make more money that way. Let me ask you about how this is widening to other commodities as well. So you've talked about how this is widening in terms of targets. We've gone from just targeting military to now industrial, and questions over energy, of course, with the truce on that front from President Trump getting an extension. But in terms of widening the commodities being affected, aluminium then is now in focus. Fertilizers, a lot of talk over the weekend about what this does to global supply chains for food. What are we looking at there, Brendan?
Exactly. So the companies that operate in the region have a certain amount of inventory that they can absorb, some weeks of a shock. But once those start to run out, and their operations there, whether they're distribution hubs or some sort of assembly that they're doing there, and once they run out of the inventory to keep their production going, they're going to have real problems, and they're going to call on the government authorities for help, and the sort of band-aids that they've put up to try to bring in cargo on the road are going to become ineffective, and they're going to need a lot more help. So it basically the signal is that this is going to widen beyond the region, the economic impact, the price of things that we wouldn't normally think would be associated with an energy crisis in the Middle East will start to go up as well.
Yeah, if you have higher aluminium prices, you'll get that hit to manufacturing, and then less manufacturing goods to go through, right? A vicious cycle. But just focusing on oil, we've got a fantastic feature today talking about how the oil shortage impact is going to spread from Asia here to the West. What's the implication of that for broader trade?
Yeah, I mean, it's one of those things. Well, everything kind of runs on fossil fuels. Shipping, the ships that move oil run on bunker fuel, and so it's all kind of snowballing in a way that's really going to go beyond the energy question. I heard a story yesterday about a ship that needed to offload onions from abroad into the UAE. Now you can imagine, you think onions, how big of a deal is that? But you can imagine a shipload of onions that doesn't get to where it needs to go, with the impact that would have on the food service industry where those need to go. It's that kind of thing that we're going to hear more and more of.
Okay. Brendan, thank you for the colour. Brendan Murray, our trade czar there, for a look at the impact on trade and shipping. Let's just take a look at what else we're watching throughout the week. Today we've got German CPI and the UK Chancellor Rachel Reeves joining a meeting between G7 finance, energy and energy ministers and central bankers as well later on. Tomorrow we have Euro area and French CPI as the French President Emmanuel Macron visits Japan and South Korea on Wednesday. On Wednesday we have Artemis 2 launching, as well as US retail sales. And on Thursday, it's US jobless claims before on Friday we get US unemployment data. But it is, of course, Good Friday, so we'll have partial market closures here in Europe and stateside. But joining us for more on what to expect in markets this week is Bloomberg's Morwenna Coniam from the Markets Today team. And Morwenna, I mentioned some of that US data coming through, but given that you've got the market closures and given so many developments in the Middle East war, how relevant will it be to traders' expectations of the Fed path ahead?
I think that's really an important point. It will be difficult to take a clear read. Also, data tends to be backward-looking, and I think right now markets are really looking forward. And in some ways, for the first time during this conflict, are really starting to price in what's a protracted conflict, really focusing on the implications for growth rather than inflation. And that's something we're seeing in the bond market today, with sovereign debt actually rising across regions, whereas we have seen it really taking a hit from those rising inflation expectations. Now people are starting to say, actually, these higher energy prices, which may be there for some time to come, are actually going to harm growth. And that actually means that central banks may take a more hawkish, have less inclination to take that really hawkish stance that had been feared. And actually, the focus could be on growth. So that data may feed into some of that. But I think actually something that's backward looking, particularly on a market closure day, is going to be difficult to really read too much into.
Yeah, so that's the US employment side. We get, before that, midweek, we get the Eurozone inflation picture. I wonder if that actually threatens to have more of an impact. It is data for March, at least, and it does relate to that pivot that we've seen in bond markets. Bond markets going from thinking about inflation to thinking about growth. They could get a reminder come the middle of the week about the inflation risks, I suppose.
Absolutely. I mean, we saw that to an extent, even with last week's CPI for the UK, which was, February, and actually we saw it in Europe as well, where it's like, but even before March, things were actually not quite as good as policymakers would have hoped. I think certainly if it comes in hotter than expected, particularly given it is for March, it will be the first time we really do see some of the actual impact on inflation that the conflict is having, that the higher energy prices are having. Although, of course, we still haven't seen those higher energy prices properly filter through to households. Perhaps we have seen it at the fuel pumps, but we haven't seen it in terms of energy bills. That tends to be a bit more delayed, but we will start to soon, and that will be really watching.
Morwenna, thank you very much. That's Bloomberg's Morwenna Coniam, and that does it for the opening trade. The Pulse with Anna is coming up next as we look at the Stock 600 now in the green, up 0.1%, and US futures getting increasingly positive, up 0.4% on S&P E-minis. That does it for the opening trade. This is Bloomberg.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, now for a full hour only on Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemima Bersecci in Davos, Switzerland, and this is Bloomberg.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Brent crude on track for a record monthly increase as Iran-backed Houthis enter the war in the Middle East and the U.S. expands its military presence. President Trump claims Iran gave the U.S. most of its demands to end the war, even as it remains unclear whether either side is directly negotiating. And treasuries rise on concerns the war will trigger a sharp economic slowdown. Money markets also slashing the odds of a Fed rate hike this year. Let's check in on some assets for you, and we'll start with the energy prices. We see oil prices up by 3% this morning on Brent at $115 a barrel. That is the handle. The WTI price, incidentally, has gone over $101. The copper price is a little firmer this morning. We've got European stocks just pretty flat. U.S. futures moving higher, up by 0.3%. The U.S. 10-year yield at 4.39%. Quick check on what's going on the inflation picture out of Germany. We are gradually building up today a picture of the German inflation story, and it is coming in much higher than the prior period, as you may expect. The Bavarian March consumer prices rising by 1.2% month on month. That is a whole percentage point higher than the previous month, which is something of an Iran effect. Let's take a look at how European markets are responding right now. We've got European equity markets are flat to positive, up 0.1%. The FTSE 100 is up by 0.4% as energy and basic resource stocks are pretty resilient this morning. The CAC 40 pretty flat and the DAX under pressure. For the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse.
Good morning and welcome to The Pulse. I'm Anna Edwards in for Francine Lacroix here in London. Now, President Trump says that Tehran has given in to most of the U.S.'s demands, even as it remains pretty unclear just how the two sides are negotiating or talking to each other via intermediaries. He told reporters on board Air Force One that he believes an agreement could come soon.
Sir, could you foresee a deal in Iran this upcoming week?
I do see a deal in Iran, yeah.
Mr. President.
Could be soon.
They offered a 15-point plan to Iran. Did they ever come back?
Yeah, they came back with a 15-point plan. They gave us most of the points.
The US president also told the Financial Times he wants to take Iran's oil. This as an additional 3,500 US troops arrive in the Middle East. Joining us now, Bloomberg Horizon's anchor Jumana Basechi. So Jumana, bring us up to speed with the latest and what's been happening. Despite apparent talks or talk of talks to end the war, we are seeing plenty of further signs of escalation over the weekend.
Yeah, that's right. And President Trump there, in a few of his comments from the weekend, suggesting that Iran do want to make a deal still. But I've got to say, over the course of the weekend, there were no signs that there's been progress towards any diplomatic solution. So if anything, there's been more military escalation over the course of the weekend. Friday, we talked about the arrival of that NEU, the Marine Expeditionary Unit, to the region. That comprises of around 3,500 troops, around 2,200 Marines. Questions really about where they're going to be deployed and whether President Trump is actually going to follow through on some of those suspected plans to take over Karg Island or even deploy them along the Iranian coastline. At this point, we don't know, but the fact that they are in the region signals that there is the potential for further escalation. At the same time, the joint Israeli-U.S. military operations in Iran continue. President Trump has said that they have struck 10,000 sites. There are another 3,000 sites that they're looking at targeting. On Friday, nuclear research facilities were targeted alongside 2 steel facilities. And in reaction to that, Iran once again lashed back at Gulf Arab states' infrastructure. We're talking about the targeting of 2 key aluminium smelters in the region. Over here in the United Arab Emirates, we're talking about Emirates Global Aluminium. Some disruptions there in Bahrain, also Alba. The UAE sustaining their biggest night of projectiles in over weeks, in a couple of weeks over the course of the weekend. And ongoing attacks in Saudi Arabia as well, and a key one at the Prince Sultan Air Base, which resulted in casualties and 15 servicemen being wounded, alongside some heavy damages on U.S. aircraft as well. So really no signs of things de-escalating for the time being, Anna.
Yeah, no signs of de-escalation then, and oil advances today, continues to advance, up by 3% on Brent, just shy of $116. It's been over that mark, of course, in the last few hours. What impact could the involvement of the Houthis in this war have on the energy story and the ability to get energy out of the region?
Another very important development that you raised there. On Saturday morning, Houthis did enter into the war. They targeted their attacks at Israel, specifically a couple of attacks on Saturday, mostly intercepted by Israeli air defense systems. But it does mark a new entrant into this war. And perhaps some people were surprised that it took them so long, given Hezbollah had also got involved in the war in solidarity with Iran. For now, the language out of the Houthis seems to suggest that they're going to continue to target their strikes at Israel. Remember, they did come to a truce with the U.S. in May 2025, and since the October 2025 ceasefire, Israel-Gaza ceasefire I'm talking about, they have not attacked ships or disrupted shipping on the Red Sea. Now, of course, all of this may change, and it is a major risk looking ahead to markets, not least because Saudi Arabia have been so successful at rerouting a good chunk of their oil exports through that east to west pipeline. We reported over the weekend that they're now using it at full capacity, around 7 million barrels a day, 5 million of which is exported from the Red Sea. So, of course, does indeed pose a risk there, but no signs as of yet that the Houthis are willing to disrupt either the truce that they have with Saudi Arabia signed in 2022 or the one with the US in 2025, but a risk for the market. I will just say that speaking to energy experts and reading the flood of research that's come through this morning, the consensus is that the longer the Strait of Hormuz remains effectively shut, the more you're going to start to see physical disruption in this market. And indeed, that is one of the reasons why you continue to see this uplift in prices. I'll just leave you with a statistic, Anna. It is estimated now that about 11 million barrels a day have been taken off the market because of the disruptions around Strait of Hormuz. Even before the war took place, IEA were estimating a surplus of around 2 million barrels a day. So net, you're still talking about daily 9 million barrels a day of oil that's being taken off the market. Cumulatively, it's having an impact. And what's happening now is the physical supply destruction is one that's really beginning to show up in these markets, and hence why you continue to see that upward pressure on oil despite the several measures and policy announcements that the U.S. administration have made.
Yeah, upward pressure on prices for sure. Jemana, thank you very much. Bloomberg Horizons anchor Jemana Besetcha. Our next guest is dialing down risk on the supply shock from the Middle East. Let's bring in Wei Li, Global Chief Investment Strategist at BlackRock. Wei Li, nice to have you with us on the programme. So I want to get into some of the inflation dynamics, growth concerns in a moment, but just tell us how you're dialing back risk. What is the approach that you're taking?
Well, last week we noted that there is a disconnect between equity pricing and also the broader market and supply disruption. So when we were looking at U.S. equities, still just 4% lower from the beginning of the conflict, that's just not consistent with the oil market pricing in doable disruption. So this is why we dial down risk. But right now we're actually really thinking about thematic opportunities that will be accelerated by events in the Middle East, no matter what happens from here on. And energy security and energy independence is one such theme. So we're actually putting out the research paper this week, specifically talking about how we can play to this theme. If you think about of the 8 billion people living on Earth, 80% of them live in countries that are energy oil importers, and 60% of them live in countries that are natural gas importers. So we're talking about environment, really supply is disrupted, but perhaps also takes longer to recover from, because we're talking about energy infrastructures being impacted. And also it's possible to see that countries will focus on kind of building resilience and also stocking up inventory even after the war. So when you bring all of this together, we're in this environment for longer, supercharged environment of world shaped by supply. So we're talking about an environment where we look at energy independence, and it's all of the above when it comes to energy choices. That was already the case last year. We put out a research note talking about how in the context of AI data center build out, we need to tick all the energy boxes, but now even more the case, right? So you look at energy as a sector in U.S. equity market, S&P 500, it's just 4% of the index. It's foreseeable that could grow, and that should grow, reflecting the greater significance. And you look at, like renewable, clean tech, electro tech, these are the themes that we find it really interesting right now.
Okay, and we know that there's going to be a meeting of certain G7 leaders. I think it's finance ministers, central bankers, all going to be gathering today to talk about some of those things, energy independence and the importance of investing in it, Wei Li. So if you're taking a sort of medium-term perspective here, does this mean further opportunities for renewable energy, nuclear projects of varying sizes? Are those the themes that you're still investing around?
I think so. Renewable and also kind of all of the above for all energy boxes, right? Because demand is increasing and the supply is disrupted for now and maybe for quite a bit longer. But in addition to energy, we're also looking at broader supply chain resilience as a key theme, and also infrastructure as a key theme, and also defense as a key theme. So if you think about all these events, developments, catapulting structural themes that were already in place, I think they're just getting accelerated even more. So whilst we dial down directional equity conviction, so we're neutral right now for U.S. equities and broader equities in general, we are leaning into these themes that are becoming more and more clear, even as we think about kind of the world after the war.
Yes, okay, so these are some of the themes. We'll return to those in just a moment, Wei Li. I just want to get your thoughts on the near and present inflation risks and dangers. We've just had a host of data coming out of Germany, which shows, I mean, roughly a 1 percentage point step up in rates of inflation in the various regions. I'm looking at Bavaria, the month-on-month inflation there is 1.2%, Brandenburg 1.1%, Saxony 1.1%, North Rhine-Westphalia 1.2%. These are the month-on-month inflation upticks that we're seeing in these places. This tells us something about the very near-term impact. I guess if oil prices stay elevated for a longer period of time, or even go much higher, then there is still inflation risk to the upside, even after these numbers have come through for the month of March.
I think that's very fair. I think one thing that markets were complacent about and we have been flagging coming into this year is the disinflationary trend that people are feeling really comfortable with, and that is starting to look quite precarious, right? So I think what is happening right now, this broader supply shock against a backdrop of inflation already above target in most part of the world, is that actually central banks are going to find it increasingly hard to justify wanting to look through, especially because they lost control of inflation during the COVID times, right? So I think the question is going to increasingly shift from can central banks cut to can they hike fast enough to catch up with inflation? Because if they don't, then real rate that accounts for inflation may well be actually accommodative, not restrictive, even as they hike, right? So we're talking about an environment where the calculus facing central banks is really, really challenging. You talked about inflation, but then the read across to growth is capturing a lot of kind of investor focus. And you look at some of the front-end repricing since the second half of Friday, it starts to show that maybe they are worried about the growth dynamics as well. I think all of that is pointing to the trade-offs facing central banks is becoming quite impossible right now.
Yes, so are we going to see central banks increasingly having to hike, even though they know they're hiking into weakness?
I think the question will be, are they going to hike fast enough to actually offset inflation? Because it's the real rate that matters in terms of financial conditions. So it's possible. But one last consideration I want to throw into the mix, which is the very high debt levels facing DM economies, and the debt servicing considerations may well actually limit how far central banks can hide. And that, again, just makes the trade-offs facing central banks really, really tough.
So monetary policy actors very aware of the impact that they will be having on fiscal actors then there. I mean, in terms of the other themes that you mentioned around defence and infrastructure, so clearly a lot of themes to invest around. Is there further to go then on the defence narrative for Europe? Because you've seen, I mean, European defence stocks have really gained incredibly since, well, the full-scale invasion of Ukraine, and then this has just added to that sense of urgency around investing in defence.
I think that's fair. I think the decision to increase the defence spending definitely catalyzed a re-rating in European defence names, but we are also looking globally for addressable market, right? Because the size of the market is only this much in Europe, so inevitably there could be spillover into the US market. So we're thinking about all of these themes from a global context. Equally for infrastructure, you know, like infrastructure could be disrupted. Where they will be rebuilt is important to consider. But some of these infrastructure companies, they're global, right? So again, they play to this theme almost regardless of where new infrastructures will be rebuilt. But I think it's safe to say because there will be greater focus on resiliency, so reshoring is a consideration, and I think that inevitably points to greater demand to build more and potentially duplication and excess, but that just kind of enforces the near-term and medium-term demand, and that enforces the investment theme.
We've seen emerging market assets under pressure during the month of March, that's for certain, but a number of people have pointed out that actually the state of emerging market debt, for example, had been improved in the run-up to this particular war. And so I wonder where that puts EM and DM assets when you think of those, Wei Li, now, because you mentioned the debt levels that developed markets have to confront. Do emerging markets, how do they look to you? Yes, they've sold off. Do they look like there could be opportunities there now?
We like to play emerging market at this particular juncture through our modest overweight in dollar emerging market debt, also because of the index greater exposure to Latin America that is well positioned along the energy importer exporter spectrum. But one broad observation I would make is that actually since the end of February, beginning of March, we have seen a bit of a reversal of the market performance in the beginning of the year. So if you think about dollar, it went from kind of weakening to strengthening. If you think about the relative performance of U.S. market versus international market, that reversed as well, and emerging market is part of that. And if you think about curve steepening and now flattening, so it's we have seen a bit of a reversal of the crowded positions early in the year, and I think emerging market has been caught up in that. But over the longer term, the structural improvement of the quality of EMD is also why we are modestly positive on dollar EMD at this juncture.
Yeah, another crowded trade in the run-up to the war was around AI and the physical products that were going to benefit from that in Asia. So we'd seen software selling off, and we saw hardware gaining in Asia. That was a January, February conversation. And now we've seen a reversal of that as well. I mean, are there opportunities within that space, Weili? Now we've seen that reversal, or do we continue to play that reversal of the things that gained in January, February?
I think in AI, we see even more pronounced pattern of narrative swinging from one side of the boat to the other side of the boat and back, right? Just because there is a time lag between spending and revenue creation. So markets are anyway going to periodically question the huge spend, even without the geopolitical events kind of throwing additional volatility to market. But the bigger picture in AI is that we see conviction in AI transformation increasing, not decreasing, as evidenced in big companies' commitment to spending more capex. So we continue to think that the trend is in the right direction, but because it may take a while for winners to emerge beyond the build-out layer winner, which is the picks and shovels. If you think about adoption layer winners, it would take time for them to emerge, while it actually is becoming clear the losers were those that don't have a moat, don't have a vertically integrated system and data to kind of incorporate into the ecosystem. Then they have been disrupted, like some of the retail software. So all of that just to say that is why we're seeing huge amount of volatility in AI, because the focus shifting from winners to losers, and then the adoption layer winners taking time to emerge. But the overall direction is positive. Conviction is increasing. We want to be actively invested in the AI transformation theme.
Weili, thank you very much. Thank you for bringing us your thoughts this morning. Global Chief Investment Strategist at BlackRock, Weili. Coming up on the programme, how Pakistan is styling itself as a peace broker between the US and Iran. We'll discuss where the path to diplomacy goes from here. This is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it.
I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Pakistan has offered to help facilitate peace talks between the US and Iran, despite the situation on the ground appearing to escalate. This comes after Pakistan's foreign minister met counterparts from Saudi Arabia, Turkey and Egypt. Joining us now with regional analysis is Sanam Vakil, Director of the Middle East and North Africa Programme at Chatham House. Sanam, nice to speak to you. How would you rate the chances of any face-to-face talks taking place between any Iranians and Americans, and what should we expect on the talks agenda?
Good morning. It's nice to be with you. On rating the chances, I would say very slim that they meet face to face. But the fact that diplomacy is and on the table right now is very important. I think President Trump is assessing if an off-ramp to this war is possible. The while, it's important to note that the U.S. is mobilizing troops to the region and is considering an operation to open the Strait of Hormuz and potentially also try to take Iran's highly enriched uranium that it buried last summer in the June 2025 war.
Right. I mean, we've got the US then flexing its military muscles, Sanam. We've also got the Iranians increasingly aware of the lever that they control, which seems to be the Strait of Hormuz. When you say that there is some expectation, or at least some talk of the Americans trying to take the strait, what could that look like?
Honestly, it's a very dangerous operation. It's unclear exactly what it would look like, but the U.S. is bringing amphibious forces in. They have the 82nd Airborne coming in. It would be a combination of ground and air. And they ultimately also need to assess if the Strait of Hormuz has been mined as well. The expectation from military strategists and experts there is this is going to be a very dangerous operation that will certainly be deadly, and one that I expect the Iranians have been preparing for. So, you know, this is what in door number one, and door number two, of course, are the negotiations that you asked about as well. And that is continuing, but not through any sort of direct contact between Tehran and Washington, because you will remember that prior to this war, both sides were indeed speaking, and that didn't result in a deal.
Yeah, it did not. And I mean, what kind of extent of regime change do you think, Sanam, we have already seen? Is it just personnel change? Any sign that the regime is weakened?
The regime is certainly weakened because militarily the United States and Israel have been pummeling Iran and taking out its ballistic missile facilities, striking its nuclear facilities, striking Iran's infrastructure. So certainly this system is going to be weakened, and we haven't seen the humanitarian consequences either, and the elites have been decapitated. But this is not a personalized system. It's a bureaucratic system. And so they've been able to replenish their forces. I think the biggest challenge for Iran will be when this war stops. Right now, they're able to fight on, and that says something about the regime's resilience. Donald Trump can walk away and say perhaps he's changed the nature of the regime, and certainly he has done that. But I don't think he's brought to the fore a better group of people. He's just created a hardened, militaristic version of the Islamic Republic.
Sanam, just very briefly, what do you think Saudi Arabia is pushing for here?
Well, yesterday we saw Saudi Arabia's foreign minister sit with Turkey, Pakistan, and Egypt's foreign minister. And I think together they see a deal or a negotiation as the only solution, because if the United States puts boots on the ground in Iran, that is going to be a very dangerous endeavor that will impact everyone.
Okay, thank you very much for your analysis. Sanam Vakil, Director of the Middle East and North Africa Programme over at Chatham House. 9:26 here in London. Coming up on the programme is one of the few European nations running a budget surplus. We will discuss the impact of the Iran war on the European growth story, and specifically the Portuguese growth story. Portugal's finance minister will be with us. There's been a lot of talk about surpluses over in Portugal. Does that leave them in good stead to fend off the crisis? We will talk about that next. This is Bloomberg.
Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot. Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about on this show many times.
I think you find, and you've heard this on your show, you've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance, we're talking about it. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up to the minute global news whenever and wherever it happens. I'm Anne-Marie Rodern in Davos, Switzerland, and this is Bloomberg.
Good morning. Welcome to The Pulse. I'm Anna Edwards in London, and these are your top stories. Brent crude is on track for a record monthly increase as Iran-backed Houthis enter the war in the Middle East and the U.S. expands its military presence. President Trump claims Iran gave the U.S. most of its demands to end the war, even as it remains unclear whether either side is directly negotiating. And Treasuries rise on concerns the war will trigger a sharp economic slowdown. Money markets also slashing the odds of a Fed rate hike this year. Let's pivot from what's going on in the US and US monetary policy expectations to the European growth story. Now, Portugal, as an interesting case study, has posted a bigger than expected budget surplus for 2025. But that fiscal cushion is now being tested by severe flooding earlier this year, as well as the Iran war, which is weighing on growth across Europe. We're joined now by Portugal's finance minister. I'm pleased to say that Joaquim Miranda Sarmento, the Portuguese finance minister, joins us on the programme. Minister, thank you very much for being with us. As I mentioned, you recently reported a higher than expected budget surplus for 2025, which no doubt is a good story, a positive. But how concerned are you that the war in Iran is going to damage the fiscal position of Portugal?
Well, good morning. Thank you for your kind invitation. Until this conflict in Iran, the prospects of growth in the Portuguese economy and in the European economy as a whole were quite positive. Obviously, in the case of Portugal, we had several storms and floods that affect part of our territory with significant economic and fiscal impacts. And now we have this situation in Iran. Obviously, will depend substantially on the duration, dimension, and impact of the conflict. If the conflict continues for a significant time and affects the supply of oil and gas, most likely will have a significant impact in the growth of the world economy and the European economy, and obviously the Portuguese economy will be affected by that. Nevertheless, we, just like you said, we have a fiscal surplus of 0.7% of GDP in 2025. Our fiscal forecasts are significantly positive for this year and next year. So we are our public debt is now below 90% of GDP. So we are in a very positive situation to accommodate and to respond to the impacts of these several crises.
Okay, Minister, what are you looking at, though, in terms of Portuguese reaction to this crisis? We've seen lots of Asian countries having to quite rapidly come to terms with the idea of rationing fuel consumption. Are you looking at any such measures for Portugal?
Now, I believe we were the first country in Europe to respond to this crisis in terms of fuel prices. We have already approved several significant discounts on tax fuel to accommodate part of the increase on diesel and gasoline. We're also supporting families with low incomes and also transport companies. We don't expect any rationalization of consumption, but I believe some companies are obviously increasing their distance working and avoiding some traveling. But for now, the problem is more on the increase of price of fuel, not electricity, because the Iberian market is relatively protected from gas price increases, but obviously on fuel, the impact is significant, especially on transport of goods and people.
Are you concerned, Minister, that it could be difficult to replicate the success with the budget surplus this year because of war in Iran?
Well, this year have several challenges. First, we have a significant impact of the EU Next Generation loans, which is the last year of the program, and we have 0.8% of GDP this year on loans for investment and projects. That by itself was already a significant challenge. Then we had the floods and the storms that will have an impact, a fiscal impact, at least 0.5% of GDP, and now this conflict that could obviously have a significant impact on GDP growth and the measures needed to compensate families and firms with a significant fiscal impact. Nevertheless, we are committed to keep our fiscal balance. Even if we have a small deficit, that we will continue to reduce our public debt. And after this year, which is a very difficult year, we will continue to have fiscal surplus over the next years. So the fiscal position of Portugal in this moment and for the next years is quite positive and allow us to respond to these several crises with a very significant instruments.
Are you more concerned, Minister, about higher inflation or weaker growth, or a combination of the two?
Well, I think we are in a very different situation from 2022. In 2022, we had two shocks almost at the same time. We had the shock on supply with the war on Ukraine, increasing prices on energy and food. But before we had a shock on demand, when the pandemics start ending, people start consuming substantially, what was called at the time the revenge spending, and production was still below the pre-pandemic levels. So were those two shocks after a decade of a very expansionist monetary policy that created inflation in 2022, and that inflation was fought with a strong increase on interest rates from central banks. We're now in a very different situation. We have a shock on the energy prices. Let's see about food prices, what the impact will be, but we don't have a shock on demand. On the opposite, if this situation continues, most likely consumers will slow down their consumption pattern, and production is very high. So I think we'll have a little bit more inflation, but far from what we had in 2022.
Okay, and looking at the economy more broadly, you've signalled your desire to bring in some tax cuts. Portugal still has relatively high tax burden compared to other parts of Europe. How do you manage to or plan to stay competitive?
Well, we have in this last 2 years, 2024 and 2025, strongly reduced the income tax. We also create a special income tax for people under 35, so we can attract and retain young talents. And we have also approved a strong reduction on corporate tax. We will continue, as we'll have some fiscal margin for that. We will continue to reduce the income tax for the next years, because you're right, when we compare Portugal with some of our competitors, we still have marginal effective tax rates higher than some of our competitors. So that effort will continue over the next years, especially on the income tax.
Yeah, can I ask you about consolidation within the aviation sector, Minister? Because, of course, TAP is the subject of that. You're expecting this week, I think, non-binding bids. This is, of course, a sector that has been really affected by higher oil prices already. So how confident are you that you're going to see strong interest for TAP?
Well, I would separate what is a short-term crisis that obviously, if continued for a long period, could lead to a recession. But nevertheless, I would separate that from medium and long-term perspectives. TAP is a very well performing, consolidated company. It's probably the last company, at least on the mid-sized company in Europe, available for the three large aviation groups to continue to grow. It has a huge market in South America, especially in Brazil, but in South America as a general, also a good position in US and Canada markets, and also Africa. So I don't think that those groups, but let's see on the 2nd of April, which is the deadline for a non-binding offer. But I think those three groups continue to look at TAP in a medium and long-term perspective of growth, and with the fundamentals of the company relatively good. And I don't think it will have this crisis will have a strong impact on the interest and the conditions for the privatization.
Okay, we'll continue to watch that then. And consolidation in another sector in focus in Europe, Minister, and that is in the banking sector. I wonder if you expect further consolidation across the European banking landscape, and whether you would be comfortable with more foreign ownership of Portuguese banks.
Well, I can give you an example. Last year, there was selling of Novo Banco, which was a bank owned 75% by Lone Star and 25% by the Portuguese government. And that bank was bought by BPCE, which is the second largest bank in France and one of the largest banks in Europe. And we welcome that offer from BPCE. We have no problem with foreign banks buying Portuguese banks, as long as there is no excessive regional concentration. And at the time I said, well, Spanish banks already had 1/3 of the market. We should stop by there. But again, we welcome any other banks from Europe to invest in Portugal, both on the banking or insurance sector, or in share services, like some large banks already operating large operations in Portugal in terms of their back service. So I think there is a need in Europe for stronger consolidation of banks. We need to create banks across several countries, and Portugal welcomes the investment of banks from other EU countries.
Minister, thank you very much. Thanks for joining us. The Portuguese Finance Minister, Joaquim Miranda Sarmento, we thank you very much for your time. Sticking with the banking sector, the chief executive of HSBC says he needed to make changes from the top down when he began his radical restructuring of the bank. Jorge El-Hedari says not enough executives were fully accountable for the performance of their businesses. He's been speaking on the latest episode of the podcast series Leaders with Francine Lacroix.
I was definitely ruthless about killing the complexity and the drag in the bank. The most difficult part is when you have to separate with some of your colleagues. I think we've been very thoughtful, we've been very considerate, we've done it hopefully the right way and the most respectful way for the benefit ultimately of the firm and its customers. We needed to be agile. We needed to be, to be ready for a modern world. And to be that, we needed to be simple. And therefore, kind of everything then drives what decisions you take from that mission statement.
How did the bank become so complex? And again, this is something that actually most organizations have to face as they grow. I guess there's, various factions, or a lot of companies actually could just become much more simple and simplified. What did you see?
Entropy is a feature. Entropy tends to increase, which means complexity, if you do nothing about it, tends to increase rather than decrease. So things don't become complex by design. They end up becoming complex by lack of focus. So bringing the focus at the simplification will allow you to start dealing with it. That's the first observation. Second observation is you have to be extremely methodical. What has created the complexity? How can it be addressed methodically? Try to identify ways to be simple. Some of the ways to be simple is to decide not to do certain things, and this is why we exited a number of activities. The third thing is when you're taking structured decisions, you have to start from the top down. You can't take structured decisions from the bottoms up. This is why the first decision structurally I've taken relates to simplifying the group operating committee. We moved from more than 20 people to about 12. More importantly, we moved from 0% single accountability. Everything had dual or multiple accountability to now about 60% of our revenue is generated under single accountability. So that's important. And then the last thing, Francine, is to be patient, because we're not solving simplification overnight. It's going to be a journey, and we have to be relentless at that journey, quarter after quarter, month after month, until we get the desired outcomes. And that journey is still on, we're not there yet.
But as a big chief executive of a big bank, you basically have, the shareholders that you need to please. So simplification maybe helps with them understanding what the bank wants to become. You have your clients, and then you also have the employees. So how difficult is it to juggle these, the three masters?
So there is one consideration which, fortunately, the three masters align on, is being best at what you do. Your customers want you to be the best at what you serve them with. Customers tick. Your shareholders will pay you for what you're best at doing. They won't give you valuation for something that you're average. They will give you valuation for where you really command, where you're an authority in being able to provide that service or that product in that market. So the shareholders align to be the best. And then our colleagues want to be the best. Our colleagues want to win. Our colleagues are in a competitive landscape, and they want to win. And they basically thrive when we're delivering the best we can, and when we're delivering best outcomes. And we're basically the best at what we do. So, you take this as a guiding thread and you say, let's focus on that. Focus where we can grow in areas where we're the most competitively advantaged. And then everybody aligns, colleagues, clients, and shareholders.
Is that why you learned Mandarin? You wanted to be the best for HSBC?
Yeah, I don't think I'm the best at HSBC speaking Mandarin. That's far from it.
But you're the first CEO to speak Mandarin.
Possibly, yes. I think what is important is to gain access to understanding, the culture in which HSBC operates. And obviously, one of the very important cultures within HSBC as a whole, but that is probably one of the least understood for, say, people living in London, like I'm living now, is understanding the Chinese culture. And, if you really want to understand the Chinese way of thinking, the way of reasoning, the way of negotiating or engaging or presenting simply, then there is no better way than kind of put the pain in trying to learn the language and see how it's done in the language.
It was quite bold because you took a sabbatical for it. Was it a difficult decision, or did you automatically know this was the right way to also service your clients?
First, I knew if I really wanted to make a leapfrog in my early starts in Mandarin, it needed much more time than I could give it. Now I'm proud to say I still take lessons. Whether I'm progressing or not, I don't know, but I'm still taking lessons. I'm maintaining that journey. But there needed to be a leapfrog at the start, which a sabbatical has helped.
Was it for yourself or was it for the bank? Because it's interesting. It was Mandarin and nothing and not something else.
No, well, look, I mean, I've taken 6 months out, and there are a number of things I achieved during those 6 months. Some of them personal, some of them professional. But yes. It was full on.
You can catch more of that exclusive conversation with the chief executive of HSBC in the new Leaders with Francine Lacroix podcast. It launches later today. Coming up on this programme then, the latest CPI figures out of Germany, wrecking the image of inflation being well contained in the country perhaps. We will discuss that ahead of the wider euro area release tomorrow. This is Bloomberg.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. The stories informing finance with Bloomberg Markets. And rates, risk, and the cost of capital on Bloomberg Real Yield. A different topic every weekday, now for a full hour only on Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg. It's Jobs Day, and Bloomberg has the report under surveillance.
Right now, the headline bad news is bad news.
This is a stagflationary mix.
It's a double squeeze for the rest of the world.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The market is tightening financial conditions.
It's not just what's happening present day. It's 5, 6, 7 months out.
The longest first quarter ever continues.
The March Jobs Report, Friday on Bloomberg.
This is the Pulse. I'm Anna Edwards in London. Let's talk about commodity markets. Oil is rising. Oil prices are rising today as the Iran-backed Houthi militant group in Yemen enters the war in the Middle East. Elsewhere within the region, strikes on aluminium plants are threatening to send a fragile market into crisis. Let's take stock of where we are then on the commodities story. Bloomberg Energy and Commodities reporter James Heron is with us on set this morning. James, good morning. So what impact could we see then from the Houthis entering the conflict? Not necessarily because of any superiority and firepower, but just because of where they are geographically positioned, what they're able to hit.
Yeah. Well, the Houthis for a long time have been threatening Red Sea shipping, and that's been there was an irritant for the global economy way before this war started. Now the Red Sea is vital because the Saudis have redirected 7 million barrels a day of crude from the Gulf to the Red Sea. These ships are sailing. It's a vital lifeline for the market. And now with the Houthis entering the war, it really puts a threat to some of this shipping at least.
Even though some of the shipping had not gone back, we've seen it disrupted, haven't we, over recent years, and it seemed to be almost closed, and then we saw talk of some of the shippers going back in. Did they ever go back in through the Red Sea, through Suez?
Only in a very limited way, but the risk-reward ratio has really never worked out. Now, obviously, the reward is much greater because there's all this oil that has no other way. The Saudi oil has no other way out than through the Red Sea. So, yeah, it depends where the ships go, because The Houthis mainly threaten the southern area, which is quite far from where the Saudis are loading the crude. But, these ships have got to sail out of the Red Sea as well to get to market. So a lot depends on, how aggressive they are in targeting shipping.
And there'd been a lot of talk about how there'd been a truce between the two as well recently. So we'll see how that plays out. Briefly on aluminium then, we've seen facilities hit. And actually, I think 9% of the world's aluminium comes from this region, comes from the Middle East. So this could have an impact more widely.
Yeah, I mean, obviously this aluminium was already shut in because it has to get out through Hormuz too. But like with energy, when we saw the gas facilities attacked, the risk that there's going to be long-term damage. So even when the war is over, we're going to see a long-term impact from facilities that could take months or maybe years to repair. The market's reacting to that. We're seeing that in aluminium prices this morning. So it just represents another long-term risk from the conflict.
Okay, yeah, so it's not just the shut-in, it's the fact it takes such a long time to fix things and get things back up and running. James, thank you very much. Thanks for coming to talk to us. Bloomberg's James Howen. Let's pivot to the macro story. The German economy has shown signs of recovery following a period of stagflation and dwindling performance, though the reversal may be short-lived as the global shock of the war in Iran spreads across the nation and the rest of Europe with risks of rising inflation. We're joined now by Bloomberg Europe economy reporter Mark Schroers. Mark, good morning to you. So what does Germany's latest regional CPI data tell us? There's been quite a step up in the inflation figures that I've seen this morning across the Bloomberg terminal.
Yeah, yes, Anna, you're absolutely right. We were all eager to see the data as they offer an early read of the impact of the Middle East conflict on the euro. The big question now is to what extent this accelerates, or if it even how long it lasts, and if it spills over into the broader inflation picture. And that's what economists and also policymakers will focus on very much at the moment. So what happens to inflation expectations, what happens to second round effects on wages and